Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
42.34 on the S&P 500, about 2 minutes away from the end of the trading day. Romaine Bostick, Caroline Hyde, and Taylor Riggs counting you down to the closing bell. And here to help take us beyond the bell, our global simulcast team, Carol Massar and Tim Stenovec, bringing together our Bloomberg Television, radio, and YouTube audiences here to parse through all the moments of the day. And the moment of the day, of course, Carol, has to be the reaction to today's jobs report.
A reaction, a shocking report, right? And listen, those inflation worries kind of went away. We do know that we still have a long way to come back for the labor market, but it kind of said anybody who was worried about inflation or worried about maybe the Fed starting to have to act anytime sooner rather than later, Tim, that was kind of put to the side.
Yeah, and there's also a question, I think, too, of economic stimulus. The idea that the economy is just not as good as people thought it was. Look at how big the miss from economists was. It was so significant there. In absolute terms, it was among the biggest ever misses. And as a result, Caroline, investors are saying, hey, and I hate to say this, but bad news is kind of good news for the equity markets today.
Yeah, good news for the equity markets, not such good news for the economists. I mean, shout out to Jefferies. Come on in. We are welcoming you with open arms. Come on our show, because they were betting 2 million job increases. Wow. They've got to be sort of, well, waiting for the next month, maybe, Taylor.
But there was so much confusion within the high-frequency data. Frankly, all the numbers up to this point showed so much strength. And then, of course, I know we'll talk about this later, CEOs had been kind of hinting of a labor shortage. Well, the costs are going up. Well, it's hard to bring people back. So it all depends on how you slice and dice the data, Romaine.
And while we sort of go through these short-term moves here, we always need to remind ourselves that the market is a forward pricing mechanism, a mechanism for the long term, and that long term still looks relatively good, at least based on what we're seeing here on this day. 42.31 and change right now on the S&P 500. That's a record high, up 0.7%. The Dow Jones Industrial Average, 34,772, up 0.6%. That's a record high. The Nasdaq Composite going to finish the day up about 0.9%, and the Russell 2000 managing, believe it or not, to outperform on this day, up 1.3% here, something we haven't seen in terms of outperformance for the Russell in a few days.
Yeah, up on the Dow and the S&P for the week overall, 2.7% higher on the Dow Jones Industrial Average this week. So the outperformer, the Nasdaq down for the week. But you mentioned, Romaine, about the market, the equity market being a pricing mechanism. Makes me think about what Treasury Secretary, former Fed Chief Janet Yellen said at that White House press briefing, saying, we believe we will reach full employment next year. So again, maybe investors looking ahead that things ultimately, Tim, will be better.
Yeah, certainly. And look, I think that we're actually seeing this. We certainly saw this play out in the equity market today, guys, with the missed estimates with the jobs report leading to a surge in U.S. equities, Taylor.
I love the radio audience is going to love this. When I get to go show a sector chart, really describe that everything that's supposed to be a loser is still in the red. I'll get there. First, let's start with some of the gainers. Some of the consumer durables up 2.3%, energy, semiconductors up 1.4, 1.9% for our radio audience. You're really seeing companies like Nike, Tapestry, Ralph Lauren, really the big improvers on the day. And then, of course, the losers, there was only one. It is the telecommunications companies. It's AT&T, it's Verizon, but pretty much all you need to know is the worst performers, they're still in the green, Carol.
Yeah, good to know, right? We saw a lot of broad-based buying in today's trade. Let's talk about some of the gainers. My number one, Match Game, Match Group is what I'm really talking about. It's a reopening play. They reported.
Not a big online dater, Carol? Is that what you're saying?
My husband hopes I'm not a big online. I'm not, Sean. I'm not. Anyway, the stock was up about 4.5% today. We know earnings. We got them Tuesday after the close. Rallied Wednesday. Rallied again today. Expedia. It's another reopening play that I can talk about with my husband. We will hopefully travel. EPS and sales beat. Gross booking still down, but much better than the second quarter. And you can see that stock up, what was it, 5.25% here. Uber, got to talk about Uber climbing 24% or so on strong growth in delivery. So we saw that stock a little bit higher in today's session. And Peloton, I want to just point it out because it's been all over the place. It was up as much as 10% today, but finishing the trade unchanged. But it was a wild week, Tim, for Peloton.
Yeah, it certainly was. I've got a little food and drink theme going for my decliners today with a side of gambling here. So Beyond Meat down around around 7% today. Sales coming in below expectations. Restaurants and stadium closures still weighing on the company. Shake Shack down more than 15%. Reported mixed first quarter results, disappointing second quarter guidance as well. And check this out.
Wait, I don't
Monster
understand,
Beverage.
Tim. If they're not eating burgers and they're not eating
I'm all about the
veggie
Chicken
patties,
Shack, by the way.
What are people eating?
Vegetables, Romaine.
Well, they're drinking a lot of
They eat
Monster.
avocado.
That's a good point. It's all about the Chicken Shack, by the way. Monster Beverage. This was an interesting story. We've been talking about this. The company saying that margins coming under pressure because of an aluminum can shortage in North America and Europe. That could hit gross margins, finishing the day down 4%. DraftKings reported earnings down more than 6% today, guys.
What also is down, I'm going for an FX story right here, right now. It's all been about the dollar moves. When we go cross-asset for our radio, TV, YouTube audiences, I'm looking at a dollar index that is off by 0.7%. We're falling to a 10-week low. We haven't seen these sorts of levels since back in December. As we see the jobs number, what a quarter of where people were expecting, missing every single estimate, well lower than expected. And of course, inflationary pressures coming down. We go lower and the dollar is lower for longer in terms of rates. The euro, therefore, up 0.8%. We also see then that move into commodities because we're on a tear. Dollar goes lower, commodities go higher. We're at the highest since 2015 in the Bloomberg Dollar Index. And we are seeing zinc up 2.6%, steel up 0.9%, copper at a record high. And overall, this is a story of movement into commodities. ETF flows. We haven't seen these sort of rampant 11-fold increase in ETF flows last week into commodities. And lastly, well, globally, it's been a big old mixed bag in terms of sovereign bonds. We see money moving out of Europe into Singapore debt. Taylor?
Well, and it is unbelievable. The calm that we see on a weekly basis does not do anything justice about the bond markets, which frankly had a wild week on an intraday basis. You guys, it was pretty crazy to see that 10-year, as BMO Capital Markets was saying, you hit that really key technical level at a 1.464. Of course, we bounced back up there. So you're seeing yields fall on the week, but it has been a wild week nonetheless, Caroline. This really comes back all to, well, that jobs report, right? And just sort of the good news, well, the bad news perhaps maybe was good news for some of these equity markets, and the bond markets are unch on the day.
Well, show of hands, everybody, because Mike McKee said when the number crossed this morning, he's like, wait, is there a decimal point missing? So show of hands, how many thought, wait, maybe was there something wrong? Because it was just beyond all of the estimates. And we all really thought it was going to be a strong number, 1 million, 2 million, the estimates, Tim. And so it was a shocker and doesn't really kind of fit in with what we've been hearing from CEOs.
It doesn't, especially, hearing from Uber earlier this week saying that they're going to come under pressure because of how much money they have to pay drivers to actually come back and drive for the company. But I think it's really complicated. We heard from the U.S. Chamber of Commerce today, and they were very quick to point out that, hey, we think that unemployment benefits are actually affecting this. And we heard from the president today. We heard from Janet Yellen.
Janet Yellen said it wasn't.
It's much more complicated than that. People are concerned about being exposed to the virus. Potentially, their wages are not high enough for them to actually leave. And then, of course, there's childcare when it comes into this. If schools are not open to the extent that they were before, then people have to wait. People have to be at home to take care of their kids. And we know it's disproportionately falling on women. We saw women leave the workforce in droves in the last month.
Well, this is just a reminder here that this isn't really going to be a linear recovery. And I don't think anyone thought it was going to be unless you were just, a little bit out of whack with reality. And when you have this sort of unprecedented decline, this unprecedented recession that we've had, the speed of which we had it, the idea here that we would come out of it in some sort of straight upward line was a little bit out of whack here. So 266, look, under any other circumstance, you go back 2 years ago, we'd be talking about how this is a great day, 266,000 jobs created. We still got a big hole we got to fill, but this economy is still on firm footing here.
That's really important because a year ago we lost more than 20 million jobs. So a little perspective here that we need to think about, Caroline.
266. If you have that rate of change every single month, it's going to take us 2.5 years to dig out of the 8 million holes. So we're going to have to wait to see how much faster we can speed it up. But also, Taylor, to my interest, was the manufacturing weakness and what that speaks to in terms of supply chains. We had an exclusive with the Whirlpool CEO a little bit earlier, really talking about how upside down the supply chain is right now for him.
How about the everything weakness? Caroline, you nail it on the head. Leisure and hospitality, the only one that wins. Manufacturing, retail, transportation, professional services, education, healthcare, all lost jobs, Tim, though Jason Schenker, very smart, saying some of this indeed seasonality effects.
And just to be clear, too, 266, it is a long time to sort of get you back to that previous employment levels. That would still be faster than what we saw coming out of the great financial crisis.
Well, because it's Friday, I'm going to make a hard pivot. We're thinking about the weekend. We're thinking about SNL, none other than Elon Musk, Miley Cyrus. I don't know what he's going to say about Dogecoin. I don't know if he's going to be funny. But the ratings, I think, are going to be there, Romaine.
I don't know, Caroline.
Is everyone going to have to take
Wouldn't
a
even
drink
touch
every
it.
time it says Doge, right? It's going to have to be, maybe get your monster beverage and just take a little sip every time he says Doge.
Every time you hear Dogecoin, take a drink. All right, guys, that's going to do it for our cross-platform coverage. Closing the market trading day on Bloomberg Radio, Bloomberg TV, and on YouTube. Join us again, same place, same time on Monday.